Good morning, gang. Good morning. Welcome to this week's Bitcoin update. First and foremost, big shout out to Prime XBT for sponsoring today's stream. If you don't know who Prime are, obviously it's a platform where we can trade not only crypto, but we can trade forex, commodities, and stock indices. And as we've said before, the beauty of their platform is you can use Bitcoin or USDT as collateral. If you want to find out more about them, use the links down in the description. And if you do use our links, then use our codes too, which will get you up to a $7,000 deposit bonus. And also, if you use the second code, you can get 25% off trading fees. Right, so Bitcoin. First and foremost, obviously nothing to discuss today is financial advice. I'm not a financial advisor. It's for educational purposes only. It's just my view of the markets. So let's pick up where we left off last week. So last week, we were hovering around just above the range value area high at the time, and we were talking about that we had a naked point of control just above us and a fresh daily level. What I was looking for, ideally, for a short entry would be a push up into this red zone, either a failed rally or a reaction against one of the two levels, and then looking for short triggers, and that short trigger would be playing back down to either the value area high or EQ, or ideally down to the point of control or even lower. And obviously since then, let's get rid of this and let's throw on the technical analysis, and obviously this is what happens. So let's zoom in a little bit. And obviously what we can see, back when we recorded last week's video, this was Thursday, and we were here. We had that initial drive up into this point of control, which we got a really good rejection from in the first place, which was a great short. Ultimately, price then remained within this sideways range then for the whole weekend, which is fairly standard for Bitcoin for a weekend. And then what we were looking for on Sunday night is every time we put one of these highs in, we got a decent pullback. Each one, if you were scalping over the weekend, some great scalp shorts to be had. But ultimately, we were looking for these range highs to be taken out over the weekend, because typically what happens is either the lows or the highs get run from weekend price action. And what we had is, obviously, middle of the night, well, this was 4 a.m. On Monday morning, the highs were run. Didn't quite get up to the fresh daily level just above us. But what I was saying to my team in the co-pilots, as we can see here, Monday's plan, the upside, I still like the fresh daily. 17,555. If no reaction there, overall range highs. But if we do see a failed rally here with a market structure break, then I'll be also looking for shorts, and that's exactly what happened. If we zoom into the lower time frame, then we see the highs got run. We came down, we came back up. Then on the 15-minute, we broke structure because we came back down. Great short entry, and then obviously now we're still sat in that short. Now we have taken profits at the EQ because it's a sensible place, and obviously we're ranging again now. So obviously no one in the world can tell you which way this range is going to break for now, until we see it either live on order flow or actually see the candles breaking it. So for now we're range bound. Obviously profits locked in, stops at entry. If price then does continue to pump high and looking for that top of this red band, which is coming in, as we've just said then in the Discord, 17.5, then potentially looking for a reaction there, which would then run these highs, take out the early stops, potentially looking for a reaction there. If no reaction there, then ultimately I'll be looking back up at this range high. Above that, if we do continue this push up and this just continues going up, then we'll be back into the old range. And obviously the old range that bored everyone to death, unless you're a range trader. In that case, it was a very nice range to trade. But if we just throw a volume profile on this whole range, then we can see here that just above us, we've got the value area low coming in roughly at 18.9 for easy numbers, and then the point of control coming in at 19.164. So if price was to rally up this high, then I'd be looking for reactions in this zone. That'd be first and foremost. If we get a strong reaction, then we could have a short trigger, back down. See what the reaction is back at the new range high. If no reaction, continue trading this range. If no reaction at this level, then ultimately we're just back to trading this range. I'm more likely than anything, we'll be targeting the top side of the range if we can clear this point of control, because this was a very thin move on the way down. It was just a short, sharp drop. Obviously, people blame it on FTX or blame it on whatever your reasoning may be. It makes no difference. From a technical point of view, if we can reclaim this point of control, then we're back to trading this range. So again, we're still in a level-to-level environment. You know, this is not risk-on time yet. You know, if you look at the rest of the markets, you look at Dixie, you look at the S&P, it's not time to get uber bullish yet, but at the same time, it's not time to get uber bearish, because, you know, we are ultimately range bound. So what happens if we don't get a drive up? What's the next play? Well, the next play, quite simple, is if this range is lost and we do roll over. In fact, let's go back to a 4 hour so we can see this a bit clearly. There we go. So if this range is lost and we do roll over, first and foremost, I'll be looking at this point of control. Do we get a slight reaction here? If we get no reaction, then ultimately I'll be looking down to this value area low, because I do believe that this value area low is a stronger level. And the reason being that is if we draw a fib retracement from the absolute lows to the current range highs, then we can see we've got the golden pocket around here, we've got the value area low, so we do have a great range here, a region, sorry, not a range, a region here that could be strong. We've got fresh daily SR level, we've got the value area low, we've got a golden pocket, you know, we've got a stronger level here. Obviously, that's not saying that price would react there if it does get down there. You know, it could continue to drop further down, which is absolutely plausible. But what we're looking for is we're looking for regions on the chart where we might get a reaction, because it's the reactions that we're going to trade. The point of control, as it stands right now, does have a naked monthly point of control on there as well. So it will, well, not saying it will, it may offer a reaction, but obviously it might not. Something to be aware of as well is we've still got a block of single prints down here. We zoom into the 30-minute chart, we can see this a little bit better. We still do have this current block of single prints. Now if price is accepted into these single prints, then you'll be looking for it to pass through them. Okay, right now these single prints are acting as support. So we can see here, first tap, second tap. If we do come down to it again, does it hold a third time? Well, obviously the more a level is tapped, the weaker it becomes. But that's not saying it definitely will give, but obviously it's something to be aware of, which then obviously then you've got this point of control, you've got the naked point of control just below it as well, so something to be aware of there. And then ultimately, if none of these levels hold, quite simply, then we're likely looking back into this consolidation here. If that offers a bounce and a change of structure, then you got longs. If not, then ultimately I'll be looking down at the range lows. And once again, standard reaction, as we teach in our group, is what happens as price gets here. If you see price come through, reclaim back up, you've then got a long trigger to continue trading this range. If you get no reaction and price just nukes straight through, then you're looking for the lower levels, which we've discussed over the past few weeks, and I'll put a link to a recent video at the end of this. So if you want to see what our lower targets are if price does break down. So yeah, it's quite simple. It's range bound. There's nothing too exciting. Obviously, we do have a few news events going on today, which will likely bring a little bit of volatility. In fact, I think we've got news events today and tomorrow. Now, for me, anyone that knows how I trade, I don't really care about the news events themselves. However, it does bring a little bit of volume into the market because the gamblers go a bit wild. So, a point to note when there's a news event, anything that can spike volatility is whatever happens, do not chase the candle. I teach my guys this in the group and in the free group as well. I teach the guys this all the time. You know, once the volatility spike starts, you know, you may see a pump up. And what people do is they chase this candle because they see a fast moving candle and that's it. They think it's moon time. Or the exact opposite of that is price drops and then people chase it. And then likelihood is it just mean reverts. Which means all these people that were chasing this candle then get stopped out. It's very, very rare that you will get a full-on continuation with it. It can happen. I'm not saying it can't. But from a risk-reward point of view, this is bad trading. This is just gambling. This is FOMO. You cannot control your emotions. So what I will always say when there's a news event that can bring volatility is be patient and wait for your areas of interest. So for me, the areas of interest right now would be the value area high, taking out these highs, or up here, and then to the downside, point of control, the value area low, and as we said, this consolidation here. So it's simple. And then we'll see what reaction we get. If we get no reaction, we set out the trade. If we get a decent reaction, then we take the trade. It's as simple as that. So patience, and you will win in the end. Okay? Short and sweet today, guys. Obviously, if you want to learn how we trade, then pop over to our website, spitfiretraders.com. Once you sign up to our website, you get access to all of our educational content. There's hours upon hours upon hours of content now. Everything from absolute beginners through fibs, volume, patterns, basic retail patterns and how I counter trade them, order flow using exo charts, managing trades, Elliott wave theory, and then chat and chill live streams as well, where I map out my high time frame swing trade ideas and we talk about the low time frame. So obviously that's all on our website. Aside from that, you will also get access into our members Discord, where you will get access to my daily plans. In fact, we've due to popular demand, we've created a separate channel. So every day I'll post in my update, what I'm looking for within that day, whether that's long, shorts, and where I'm looking to take them. It's not a signal service, but it might just add a little bit of confluence to your own trading if you've got the similar ideas. And obviously knowing that I'm looking at those same areas as well, then you get the confidence boost that you might need. Right, aside from that, guys, that's it. So thanks for watching. If you've enjoyed today's content, hit that like button, consider subscribing, and until next time, gang, as you were.